Welcome to our channel. If your business purchased equipment or property and you want to maximize tax savings through depreciation, follow these step-by-step instructions to optimize these valuable deductions. Step 1. Understand that depreciation allows you to deduct the cost of business assets over their useful lives rather than expensing them immediately in the year of purchase. Step 2. Identify depreciable property including equipment, machinery, vehicles, furniture, buildings, and other tangible property used in your business with a useful life exceeding 1 year. Step 3. Determine the asset's cost basis, including purchase price, sales tax, freight, and installation costs, which forms the foundation for depreciation calculations. Step 4. Consider Section 179 expensing to immediately deduct up to $1,290,000 of qualifying property placed in service during the year, subject to income limitations. Step 5. Evaluate bonus depreciation, which currently allows 100% first-year deduction on new or used eligible business property placed in service. Step 6. Calculate regular depreciation using either straight-line method, spreading deductions evenly over the asset's useful life, or accelerated methods like MACRS that front-load deductions. Step 7. Determine each asset's recovery period using IRS guidelines: 5 years for computers and vehicles, 7 years for office furniture, 15 years for land improvements, and 27.5 or 39 years for buildings. Step 8. Complete Form 4562 to report depreciation, Section 179 expensing, and bonus depreciation on your tax return. Consider working with a CPA to optimize the combination of these strategies based on your specific income and tax situation. Don't forget to like this video and subscribe to our channel.